It's been a monumental few months and weeks, and a lot of this has been around the recent spot ETF approvals. And you've had some comments on this, Cory, that I've enjoyed of saying that the top of funnel has been replaced. It used to be these crypto firms were getting everybody in, like marketing, and that was how people maybe heard about Bitcoin. But now that's been replaced with BlackRock and Fidelity. So how do you see the recent spot ETF approvals changing the way Bitcoin's adoption plays out? Maybe, this year and next year, but also this decade. How did
Yeah.
everything just change?
Yeah. So interestingly, I've been trying to think about what it does. And the best way that I've boiled it down is there's a multiplier. Let's call it a Bitcoin ETF multiplier effect. And this is the amount of money that will flow into Bitcoin on top of what actually flows directly into the ETFs, simply because the ETFs are doing two things. One, putting their stamp of approval on Bitcoin as an asset class, and two, because of the ad spending that they're going to do. So just all of the marketing and ad spending and PR and all of that. So uh, right now I'm estimating it's somewhere between 5 and 10x. So I think that's basically what we'll see, call it over the rest of the decade. Whatever goes into the ETFs, you can attribute another, whatever goes into Bitcoin, 5 to 10x the flows into the ETFs is really the lift that you're getting from the facts that the ETFs now exist and that they're marketing it and kind of has that stamp of approval. And that is a tide that lifts all boats, the boats of everyone that owns a bit of the asset that is on the Bitcoin protocol. And obviously all of the companies and products and services and everybody working in the industry, we all benefit. This has been an incredible surge in interest and new user signups and massive volumes at Swan and new doors opening because of the new interest in Bitcoin. And I think this is the new permanent state of affairs. It's always going to be much more front of mind, much more credible, and much more accepted to be having these conversations about Bitcoin. And again, it's not even going to be like, should you be on zero or should you be off zero? It's going to be like, should you have 1% or 10% or 50%? Like that's the new conversation. It's accepted now. It's another version of chopping off the left end of the distribution. It's not acceptable anymore to have zero.
Fantastic. And so we're having a lot of conversations lately. There's a lot of interest, not just in Bitcoin, the asset, but we're talking to clients, and I'm talking to clients who are exploring how to use Bitcoin in their retirement, how to use Bitcoin in their business and their trust or different structures. And so there's this long-term view, but then there's also this, people are planning in different ways for the next year, the next 2 years. So 2024, 2025, this next cycle, what are some of your thoughts and insights about what people should prepare for or what people should expect?
Boy, what to expect? Well, first, there's so much more interest in Bitcoin that whatever your expectations were for price development, if you thought it was flat, it's probably going to be up a little bit. If you thought it was going to be up a little bit, you should probably adjust that up a bit. If you were quite bullish, you might actually be right this time. So I think that's probably the main thing. I don't generally give actual price prognostications, but whatever your expectations were, they should be adjusted upward slightly from, at least slightly from where they were over the rest of the decade. Just because this happened and it's stochastic. This is something that has now changed. It was always inevitable that large financial institutions would get into Bitcoin. This is something that Satoshi and Hal Finney used to talk about at length back in 2010, 2011. And we've always assumed that it would happen, and we've seen it happen by fits and starts over the last half decade, and now there's a deluge. And this will affect everything, right? These big firms now have the incentive to talk about Bitcoin, to market Bitcoin, to be a much better top of funnel for getting into Bitcoin than the false, misleading, and criminally fraudulent top of funnel that has existed for the last 6 years, which was the basically altcoin VC fueled altcoin bubble, or shitcoin, as our friend Matt Crowder would say, spending about $50 billion to market all of these Bitcoin alternatives. And you know what? There is no second best crypto asset. It just doesn't exist. It's just Bitcoin. Anyway, that was my sailor impersonation. You're welcome. So yeah, it's just it. I think everyone needs to take a close look at their setup. They need to have a little bit more confidence. You know, if you are into Bitcoin and your husband is not, it's a good time to relaunch that conversation that you struck out on back in 2021. And you know, it's probably a good idea if you've got teenage kids and, you know, maybe you're in your 50s or 60s to start just planting some seeds and having that conversation, because we all have a lot to figure out about succession and inheritance and self-custody and all of these questions that come around having a lot of your value in a self-sovereign, self-custodied asset, which is not something that is habit for humans. It's actually not hard. It's just not habit. We've all had the habit of dealing with the fiat banking system since we were kids, when our parents first gave us our, you know, little savings account for our allowances, back when interest rates were 6% as a norm. Anyway, so I think it's never too late to get started, but now is a better time than ever to take another crack at it or to get started on that process. It's one of the reasons I like how much we invest in customer service and in having a sales team where people actually have someone to talk to, because everyone's situation is unique. And I think there's just a lot to be gained from having an expert to be able to talk it through with. And that's why we're here. We're Bitcoin's customer service team.
Amazing. And that was phenomenal. What do you think and what do you think that this recent launch has changed? And how do you view, just one last question, how do you view this? Everyone's been paying a ton of attention to the price, the inflows, the volumes, by any stretch of the imagination. It was very successful. I mean, tremendously successful ETF launch. Obviously, we saw some selling. Do you have any quick comments on just the last, just the last since ETF launched?
Yeah, sure. So I think one thing that a lot of people weren't prepared for was kind of the outflows expected from people kind of getting unlocked out of GBTC, which is the grayscale trust that's had most of the sort of retail and a lot of the institutional volume over the last 6, 7 years. So that's been something that has happened. There were also a lot of people that had front run an expected ETF announcement and had levered longs. And, you know, when it didn't go up as much as they wanted to, they get washed out, they have to cover. And so that's kind of some of the near-term price action. This is not without precedent. The gold ETF launched in 2004 and the price was essentially flat for the first month. And then it just started marching its way up, you know, another 200 something percent over the next 8 or 9 years or something like that. So I think that's not an unforeseen possibility. And we talked about that happening. At the end of the day, $1 billion has flowed into the BlackRock ETF in the last few days. You know, that's new. That wasn't there before, probably. I have a lot of anecdotal evidence, people sending me text messages, people just reaching out to me and letting me know, you know, about, I've got a really fun one of a billionaire that a friend of mine is close to. They play on the same soccer team in New York. And this guy is like, remains a Bitcoin skeptic, but it's just so easy to buy some. And the guy was probably like half of Bitwise's volume on the first day. Like, he's a multi-billionaire. So
Yeah.
it's like those people are making their moves and it's just so easy for them now. And what's great is like that puts pressure on the folks that sell real Bitcoin like us to be really clear in our messaging around, you know, Do you want real Bitcoin or do you want paper Bitcoin? Do you want to pay fees once or do you want to pay every year over and over again? Uh, and so that's why we see this again. These are welcome participants because it just kind of brings history forward. Given that it was always inevitable, I'd rather it happen sooner, and let's get used to them being there, and let's start the work of teaching people that are now interested in Bitcoin and may own some ETF shares. Let's teach them about the value of owning the real thing and what that means and what that can do for you. You know, if part of your thesis is, I don't want to be sort of dependent on the government to tell me whether I can have my money or not, you're probably going to want real Bitcoin. And if you ever want to do anything like, you know, asset-backed loans or some of those types of things that we and other companies in the space are offering or starting to offer, you're going to want the real thing, not an ETF. So it's yeah, I'm just broadly, as you can tell, very enthusiastic about this stage, and there are some unknowns, but it just seems wildly net positive.
Yeah, so Brady Swenson, our co-founder, coined the term Bitcoin, not ETF, besides TikTok next block. So I think Cory did a great job explaining why. I wanted to ask you, why do you see Bitcoin and especially tax-advantaged IRA Bitcoin as something that's necessary for the average retirement portfolio in the upcoming years, like decade and stuff?
Yeah, I mean, so in portfolio theory terms, and I'm about to have a 20-year B school anniversary. That's the last time I took finance classes was in 2004. But you know, having Bitcoin in your portfolio dramatically improves the risk reward of your overall portfolio. And we've seen this time and time again in analyses run by every flavor of investment firm and research shop. So that's kind of a no-brainer. You want something that is uncorrelated, which is gaining in price regardless of what's going on with other assets over time. And when it does have short-term correlations because of easy money or because people have it as a risk on trade for a period of time, that will soon be countervailed by another narrative, which is Larry Fink from BlackRock and a bunch of other people talking about it as a flight to safety, which has been the new narrative that they've been pushing for the last 4 or 5 months. And so anytime you see heavy correlation between Bitcoin and other asset classes, it's only because it's kind of a short-term thing. In the long run, this is a technological revolution. This is a monetary revolution. This is a once in a species achievement. And Bitcoin is going to do what Bitcoin does, regardless of what else is going on in the market, if you zoom out and look at it in the long run. And it is a fantastic asset to add to a portfolio as a hedge against fiat printing. And again, as an uncorrelated asset class, even if you're just looking at it from quantitative viewpoints.
Yeah. Yeah. And for, I put this in the webinar chat for everyone, but if you want to go to portfolio.com, that's by Swan's Chief Investment Officer, Hafiz Zaghori, who came over from Goldman and Merrill. And that is free open source software you can use to run your scenario analysis to see what even a little bit of Bitcoin does with assumptions, how that can improve your overall returns to your current portfolio.
Can I pick out a question from Bob Dewey in the chat
Get
real
it?
quick?
Oh,
Yeah,
sure.
no, I love this one because his question is about whether people who get into ETFs will eventually move into self-storage. What's great is we actually have the perfect bit of data to confirm that this will happen over time. At Swan, over the last 4+ years, 50% of our customers have moved their coins off platform and basically take self-custody every time they buy, but it's 83% of the coins. So basically, the more you buy, the more likely, as you would expect, the more likely you are to take the time to educate yourself on self-custody and to prefer that. And I think that's obviously what's going to happen with the ETFs, which is why I call them top of funnel. You might get in through the ETFs, but as you learn more and you go down the rabbit hole, down the funnel, you'll understand Bitcoin better, and you'll understand that it's significantly more valuable to actually own the underlying, the real Bitcoin, and more people will make that move over time.